Good morning, everybody. So I titled today on YouTube markets today a lot about nothing, and the reason I did that was, you get up, you look at where the markets are at, you see the Dow is up with 300 and something. It's not what 296 now. Q's up, whatever they are, and you look at the charts, and it's like no big deal. So not yesterday, Friday, there was this sizable rally off of the low. You can see in the S&Ps here. Yes, charts. I don't know why I always forget that. I can see them. I figure you can see them. Anyway, so there they are. And sizable rally off of the low there in the last 40 minutes or so of the day. And we got a bottoming tail bar. And look, after prices take out a low like that, you typically get a bounce. It doesn't mean it's the bottom. It's a good start where we get a range expansion bar, as Friday was, but it's in opposition of this big red range expansion bar to the downside. So we always measure how far the prices get, if they can get and close into a bearish bar. And why do we give more weight to the bearish bar versus the bottoming tail bar? Because the trend is down in multiple time frames. So in other words, it's got to prove itself. And see, 393 and change is right around Friday's opening price. And we can see the little congestion area right there. So let's see what it does since it's at resistance. Just chop around, and 400, it's just a whole number. There's nothing to the left here. Right? This here is beyond what's directly to the left. And so based on, my own development many years ago and trying to figure out price movement and trying to determine why did prices able to go through an area like this. And it really comes down to utilizing these reference points that we call support and resistance. So you have to make rules so you can be systematic about your analysis. And so my rule had become, if prices traded above and below, it neutralized that area. So, it broke out, prices came down, it became support, it broke down below it, and it just kept going. And this became a momentum move to the downside, which created a void. And here was an attempt to go up, and it failed, and now retracing back up again. So it's just a lot of wiggling around and a lot about nothing so far. So as we go into today, right, clearly trend is down. Can it get above yesterday's high? Can it even get to 400, which, as I said, is not aligned with anything, but it's a whole number. And usually at a whole number like this, there's going to be option activity, open interest clustered around there. So it becomes a battle line, so to speak, as well as a psychological line. So by the end of the day, between whatever wiggles that is going to go around within this trading range here, if it was able to close above 400, I mean, that would be at least something to go on, rather than basically what happened Friday, which was, an end of day move up, maybe related to options expiration, the end of the week, and so on. So now we just see, is it for real? Well, that was for real on that day, but what does it do from here? And as the markets open up, day to day, intraday, where do they go? You can see the weekly chart is in a downtrend. It's down several weeks in a row. Came down to some support, no turn whatsoever. It is a bit of a range expansion bar, as you can see. So the thinking is multiple bars down on a weekly time frame. If it could come down, I think, a bit more, my preference, into this area here, and breaking this bottoming tail bar, I think that would ignite some more selling, and we'd get a probable turn at that point. So, we'll see how it plays out. One of the things you notice about Friday was that while there was, if we were to look at the data intraday breadth, this is day to day, it did come off of the low considerably, as you think it would with, that kind of a rally. But at the end of the day, it was negative. Now, if we were, which we will be looking for, a turning point, because at some point the markets are going to have a turning point. We get into the end of the month, beginning of the month is usually, money inflows into funds, and that's a bullish time. But we'll see an up day where the breadth will be quite positive. And what we'll look for is it to be up here around 2000 or better. And the combination of prices being in areas of support, multiple weeks down, excellent breadth. At the end of the day, I think we'll have a tradable reversal point. Now, we do see that there's been more negativity in the options activity, where more put buying. That's a good thing. It's normal on the way down. What I'd like to see is a real spike, and even intraday, where option traders will be betting on a crash. And that is historically a really good sign of a short-term bottom. We haven't seen that yet. So we'll be looking for that. Futures, we see no big deal so far, just trading at the top of the range, resistance right there. 4,000 aligned with absolutely nothing. We'll see what that can do. SPX. So the pivot, when this starts trading, and we've got 3 to the left, 3 to the right, it'll mark this as a pivot high. And then this will become our reference point of major resistance, where the 20 MA is there. 4,000 will be, I think, a sticking point. It's kind of in the middle of the big red bar there. We always look like the middle of that as being where we want to see prices stay below. If they go below it, we want to see them close below. And ideally, from the bearish point of view, it'll just stay down here, not even be able to rally up to 4,000. But again, we shall see. Same story, weekly, same rally. At the end of the day, it does have room to go higher, 3840-ish, which is that high there. And then we'll see what happens from there. So with SPX, things moving around a little bit here, but I've got, we definitely want to be above 4,000. And so 440, 4050. Now, if the markets are going up, what I'd like to see is, if they clear here going up, we could shift that higher as the premium increases, but it's up against this resistance area, which I think it's highly unlikely it would be able to get through. The idea is to start out the day with a reference point as to a call spread, if that is something that we want to consider. So this could follow through. And if it does, I don't think it's going to get through this area at all. Again, downtrend, sticking point, if it can hold on to the gain, but there's premium around 440, 450. We'll just see where it opens up and where it goes. And on the downside, there's premium down here below 3850. So 3810. And if it should drop, right? If it should drop, in the first 15 minutes or so, maybe even 3,800. So again, premiums change rapidly in SPX as prices move, but starting out with a reference point as to where we want to do a spread down here, and then let's see which way it moves, one way or the other. So I think those for today should be safe areas, and then again, we'll see which way they move in the first few minutes. And so as we look at other markets, we see, is anything showing any unusual relative strength or relative weakness? And we don't. It's just a lot to do about nothing, So even though prices are up, Qs didn't even take out the prior bar's high. If they do, they could ignite a rally because there's nothing here to the left. So again, sticking point right there. If it can get through that, that'll be a positive. And then we'll see how far it goes. And then can it hold on to the gain? Now, if it can't get through that, rally, momentum move up. There's nothing to stop it. Back down again. A good point, Terry. I was going to get to that. And so as we look at the bigger picture and then the smaller picture, what would support a possible market turning point? So first, looking for things ideally to go lower, right? Little extra blood in the street, so to speak, as prices going down into this area of support. So I've got this marked green because it's a relatively large area of price support. It's already closed below 12,000. And I think, institutions start to anticipate they do have to average in to put that amount of money to work, whereas we can find more exact points. But I'll get to the dollar and the euro, which has been an influence on the market. But the Dow actually showing some relative strength, hanging up here for now, just chopping around. The Russell basically doing a lot of same thing, nothing. But it did show a little strength by not going down below the low, but doing nothing here. One of the other things that makes the rally on Friday suspicious is Bitcoin did nothing. And there has been this correlation. It hasn't been exact, but, it closed down on the day, red, no bottoming tail. It just did absolutely nothing. Now it's hanging here on this pretty significant level of support. It poked down below and it survived, but it's trending down. It's got room to fall. I would suggest either on these Bitcoin futures or an instrument that trades with it to set an alert to see if it's moving up or down. Kind of recall, using this intermarket analysis or market internals as our dashboard intraday, as well as for swing trading. But intraday, just being aware, hey, is Bitcoin going up? Is the VIX going down? Is the NYSE tick positive? That's bullish. And of course, which way are the markets trending, up or down? So because we're in a bear market and things generally taking down, you may be like chomping at the bit for another short setup. But with the dashboard all greens, well, shorts aren't likely to work. So we need these gauges and into market analysis to keep our bias where it belongs. So we'll see if this moves one way or the other. Oil looking okay. Right, it's consolidating here. Similarly, a lot about nothing this morning. Dropping here, but just going nowhere. Silver, got clobbered with the dollar going higher. It's on some support, trying to hold here. And, again, falling back. And gold, similarly falling back here. So I'm trying to mention Euro, US. And so here, these are the futures versus looking at the Forex pair. And we looked at this a couple of weeks ago. And hey, the dollar being up as much as it is and having at this time a bit of a negative influence, looking at the euro coming all the way down here to this 2017 low. It's look to the left, buyers are going to show up there, and now it's bouncing within this downtrend. And on the daily chart, it's actually able to clear this prior pivot. So we've got a downside shakeout, and we view this, since it's taking out this major resistance, as moving sideways against a big, in this time frame, versus a larger time frame downtrend. So the dollar weakening a bit, that's a positive. I mean, everybody anticipates the Fed will be raising interest rates again, and that's, which has been driving currencies. currencies and interest rates are tied at the hip. In addition, we see interest rates, these yields, starting to lose some momentum. Now, the 5-year is not breaking support, but it is losing momentum. The 10-year, the same, it hasn't broken support. And we see the 30-year, which moves slower. It's kind of just flip-flopping back and forth. But they've all gotten extended, as well as, looking at the dollar, that got extended. So some positives in combination with other things that are, just not that bullish yet. And which leads to, hey, if the markets could make one more drop, some option traders, really betting on the crash scenario, we really could get a tradable low as we come into, the end of May here. The old saying, sell in May and go away, which is worked out this year. So looking at all of that, we'll see how the day unfolds, and of course, how the week unfolds. Different economic reports later in the week. FOMC minutes Wednesday at 2:00. I don't think anybody expects anything significant to come out of that. And then, the typical economic information at the end of the week. To you, Dan.
Good morning. Everyone had a great weekend. Not a whole lot of earnings. We have very light inventory, a couple of the Bitcoin things. And even with this big gap up, even with this gap, I don't have many alarms going off. So that's actually good. And we purposely gave, found longs and shorts. I just sent a telegram. We had Pfizer and XBI as put spreads, and they're gapping up over the high. And I just said they're good to go with the credit listed. So this is a Climo. There's a lot of these Climos on the weekly, and dailies are either going to be consolidation breakouts or continuation of sell setups. So we're kind of at a teetering spot here, going long or short. But with the end of day rally and the gap up here today, provided we take out a 30-minute high, don't collapse here, then I'm all about a continuation bounce. But the problem is the resistance Greg showed you. So it really needs to go sideways. Ideally, for the bullish case, just chops around sideways till after 3:00 and proves that it's going to hold the strength from the low that started at 3:15 on Friday. All right, so that's my bias. ASML, yeah, I just posted that, and it's not earnings. I don't know what has it going here, but gapping over Friday's high. Another, retest pattern with a Climo. So we're seeing a lot of these. I'm gonna go through this list of things. All right, GPS gapping down here. It's in a downtrend, daily, weekly, monthly. The retailers, as you know, last week were just getting shellacked. This one has earnings later in the week, so I know it's not that, but there's no pattern for me, long or short. So I'm just going to delete you. Weeks. Yeah, but remember, Thomas, just gapping up is not a pattern. So it had a breakout failure. It's on minor support gap fill, and it's gapping to these 2 days of resistance. So maybe 30-minute high. I don't know.
I'm coming.
Greg, Mike. John Williams asking, is Apple ready for a move higher? Maybe day trade. It's up here, a little buy setup. So 30-minute high day trade. In terms of fangs, I like Amazon better. Look, Amazon, possible higher low, Climo, same recipe as so many others, down a lot. So that's a put spread idea. Even Netflix I mentioned. See, going sideways at resistance, 30-minute high. That's why I like Netflix and Amazon better for day trades or put spreads. Tesla I saw down this morning, still down a little bit here. So this is not bouncing with the broader markets. And the Qs are actually weaker than the other horsemen. But yeah, that's still weak. All right, back to Vodafone. You know, another bottoming pattern again, gapping a 16 and change, but the gap's too big. So nothing to do there. There's that. A and B down. So relative weakness. I don't know what to do with that. Tesla and VMware and buyout talks like Abgo. Big gap, 114. Wow, that's getting way up here. You know, I personally would never mess around with that as a swing trade, but if it sets up as a day trade, it's fine. Abdo here, gap it down to support. So this is the one buying or trying to buy. VMware. So that's actually, and it look, you know what? It looks like the news was out on Friday because that's an unusually. Well, I don't know. I'm just guessing that this was kind of news related too. So that could be a call spread candidate. Corning got a downgrade and is not bouncing pre-market. Maybe 30-minute low. That could be a call spread. XPEV, EV had earnings gapping down. You know, it's a sell setup. So that's bearish. That's a call spread candidate. I'll put that in the window. XPEV. Axel had earnings, gapping us out. Hey, there's a nice gapper. Well, no, I take that back. I thought it was, my math was wrong. I thought it was gapping over 750. So I take that back. If it was gapping right to 750, I'd say 10-minute high, target $8. This little guy had earnings, you know, possible home run entry here. There's a big old double bottom, new low plus. This totally 99.99% looks like a SPAC. Remember how SPACs just were in comas around $10, and then you start the wild ride. So let's watch this one. This could turn out to be a home run. You know, I wouldn't call it a core long, but home run with a huge target. HLGM. No idea what they do. SIGA was a wide range bar on Friday, gapping up. I think this thing is going to run out of steam soon. Now, this is 15-minute charts, what we call an end of day base. So there were very few sellers, even though it was up so much. Look, rallied into the close, closing at the high. But if this were an end of day rally, meaning it was just vertical, and then it was gapping up like this, I'd say short a 10-minute low. Oh, really? Monkeypox story. Really? Interesting. Interesting. I just started learning about that on the news on Friday when I was in Dallas. And now today's paper, the journal said it's now spread like in the US, I think it said there's 94 cases now. So that's not good. Varoom, I don't know. That's a a dog bottoming pattern. Now, the reason I have Pearl here is this was our only loss last week in the advisory letter, only one. And we bought this. It was a nice turn from a bottoming pattern. I can take that back. It's not a bottoming pattern. It's a rising 50, but it's a bullish turn. That should have gone. And, you know, so that's Hormel. So I immediately looked at Tyson. And yeah, these things got killed. But I like the 200 here. I like this. It would have been a put spread idea if there was more juice, but there was not. I see markets, pre-market cracking here a little bit on the 5-minute chart, which is good. That means we don't have to rush or do anything. T-Doc over the highs, put spread. FDN Internet, possible double bottom, but I need a potent reversal. Software that breaks out, that has ready for a bounce. This is what I was saying. There's so many of these patterns. Climo's on the weekly, you know, nice little bounce and going sideways with a price void. This one's light volume though, 36,000. There's the bios I like. Tan, tan. Look, beautiful weekly double bottom. Look at that. So that we're gonna keep an eye on that to start nibbling in. OGN, it's up a lot already. Discretionary still in a downtrend, needs a potent reversal. Open, why am I looking? Oh, I was saying there's no pattern here. Why am I looking at you? And the answer is it had positive mention in Barron's.